Good afternoon, everyone, and welcome to the Daily Trade. We're going to discuss today what happened in the oil market on June 13th, 2017. To break it down with you, what happened over Tuesday open, and then there's an overnight session. The market did come down from 46.40 to this week's high, all the way down to this time of this 45.78 level. And the price action just kind of hovered there. So around 6 a.m., it did come back up a little bit on this high volume bar. And then as you take a look, we had a bounce back up into the 46 area, and eventually it collapsed. It created this triple top right here at 46.05. And then there was an entry trigger right here at this 45.88 level. So we got into the trade there. Price action pulled back, went against us just a little bit. And it almost tested this 46. Our stop is at 46.05, and our target was down here at the 45.66. So as we move forward in price action, within the next, let's say, after we getting in the trade, 5, 10, and 15 minutes, it went down to our target, and it printed our price. So the trade for this was 45.88 to 46.05. The risk in that was about, let's take a look. $170 of risk for a profit of $240. And as we move forward and take a look, price action fell down here, and we took our profit. Why is it important to take profit? Some people like to hold this and, hey, it looks like it's going to keep falling, it's going to collapse. We never know what's going to happen in the market. That's why we got to trade our edge and trade with a defined set strategy. The reason for that is, if the market is not closed yet, but I'm going to fast forward and show you what happened after it tested this support area, which is our target, and you will see that the price slowly start to retrace back towards our entry if you did not get out, and it looks like it's reversing back towards this area, and this created this doji. So this doji is a reversal pattern. It could go down, it could go up, nobody knows. So it went back down towards the target area, and 8 o'clock is around the corner at Pacific Standard Time. And out of nowhere, it goes back up, pulls back. It could be news. It could be whatever the case is. We cannot forecast. We cannot foresee these things. And it pulls up. It would have stopped you out if you didn't have a stop there. Price action could be continue to rise, and you never know where your stop would be. You'd be in a panic mode. These are the things we want to avoid. That's why we have to stay disciplined at all times, before the trade, during the trade, and after the trade. And someone did ask me, hey, was there a long trigger that, based on the strategy, was there a location for us to get long? Yes, there was actually a time for us to get long, and that long price would have been 45.86, and you could have captured this nice move to the upside as well. But based on our strategy, we only take a certain amount of trades a day, and we want to focus on the simplest things, and make it very simple and easy for anyone working that's not working, or just want to learn a little bit, or just kind of get a grasp of the knowledge of what's happening. You're welcome to take part in that. But so before I call today and let you guys take a look at the video of the trade of the day, it's going to be a condensed version. I just want to let people know that whatever strategy you're implementing, it's important that you follow your rules and define rules. And the biggest problem I see out there with a lot of these trainer groups and different chat rooms is that the trainer always leaves a lot of open-ended decisions for the trader to make. And I notice a lot of these traders are kind of brand new, inexperienced, or have somewhat of an idea of how to trade. They're not disciplined. Yesterday I had someone reverse a couple times and had a big loss. Our loss was about 160. He ends up having a $940 loss. I was like, wow, what'd you do? So I can learn not to do that. And then it's really important for us to really stick to the trading plan and keep the variables consistent. By keeping these variables consistent, you're able to come out with an average to calculate your strategic patterns and to make sure everything is in order so that it can be statistically calculated. If you kind of get what I'm trying to say. So this was the trade for the day. So do your best, stay disciplined. And another question came up yesterday as well. So I'm going to answer this. They said, how come we don't take every single trade that it offers in a trading day? The reason is that I've done it before and I lost a lot of money. That's why I don't do it anymore. It's difficult because if you trade every single setup there is, throughout the day the volume liquidity dries up and the trade won't work as well as it would during the open pit sessions time, because where all the volume is and everyone jumps on the same trade with you. Yes, from time to time it'll work. Like today, that trade would have worked really nice and you could have captured this long. But then what are the odds of it, once again, that it's going to work in your favor every single time? When would you call it a stop? So if you took 3 trades back to back to back and you lost all 3 times, are you going to take the 4th one, the 5th one, the 6th one? And are you going to stop eventually when you win? Well, those losses are going to offset your gains. So that's why we have to stay consistent and profitable. But that's it for today. And there's going to be a condensed version of the quick trade. And I hope you guys have a wonderful day. Okay, take care now. Bye-bye.